Good afternoon and welcome to the FX Daily Roundup with ForexAnalytix. And we've seen the dollar continue to strengthen really on the backdrop of the debt deal, if you want to call it a debt deal. But also the euro in turn has basically been a 1-2 punch because the euro has weakened on the backdrop of new lows in bund rates. And we can go on and quickly move into that. And we've discussed that multiple times. I think we even mentioned it yesterday, is that when you see these new Bund lower yields, with Bunds making lower yields, it's basically like a ball and chain. The euro is going to have a hard time trying to move higher if Bund rates are going to new record low yields. And these are new record low yields. You can see this run up in here. Quite the look at that, just insurmountable. So that certainly has contributed to the fall that we've seen, or sustained fall, I should say, with the euro. Then, of course, there's a thought that we'll be seeing quite the dovish ECB. Now, gold had slipped, and it slipped here, obviously on the strengthening dollar. But once again, these record low rates is, providing a little bit of a undertone bid for the gold. So I think that the gold can move down possibly into the single digits. But that being said, I wouldn't expect a harder break beyond that, and it probably would be the upper single digits at that. And mentioned that earlier in the week, or over the weekend. The gentleman was asking me. Let's go on and move back into the main screen. We have seen the dollar CAD. It made it to its level, but actually stretched it a little bit further than that, and we'll get to that. And I posted this in the chat room because we did make it up here. This is a level, if you remember, we came on air yesterday. We had just gone and surpassed the highs from Friday after the market turned around and backed off 50 pips off those highs. So that was a very good tone. We talked about this being two strong 2-hour bars, and really the move would be, I mentioned that we may ease back a bit, but not a whole lot. And I think we said 31 even, and looks like the low was 31.03 if it did back down, and that the market would be set to move towards this 31.42, which is confluence with 31.47. We did see the market make it to that level, right to the pip, ease back a bit, and then reassert itself. And you can see here where we found that key level, this 31.62, actually goes way back here if you look at this. And you can see all the touches coming across. So we had that as 31.62, posted that in the chat room. And I mentioned to the guys, it's like, this market looks like it wants to definitely move higher after the reversal of the Friday's reversal. But that being said, this is a good area for longs to go on and, take a little bit off, or if you're aggressive, to be short. But that I would look for the market to go and find bids on tests of the 31.20 here. So we've gone and paired back from this, as the dollar index is paired back in tune itself, not very much, but just a little bit. But the euro is trying to hold at these much lower levels. We had a very key level here on the euro here at 11.65, and that paused the market within this 2-hour bar a little bit, but we've since pushed beyond here, and you can see that 11.65 does go back some ways. And but once again, they expect a very dovish ECB, and that certainly contributed to the loss. And with the weakness in the euro, as I mentioned it multiple times, it consists of it is a portion to 56.4% of the cash dollar index. So I mentioned in the chat room, whether the dollar likes it or not, it gets pushed up because of this, thing with the euro. I mean, yes, the dollar got a little bit extra bid on the dollar, the debt deal, but we were already higher. It's really just this fall in the euro, which is being, I don't want to call it decimated, but certainly being pushed lower with the fall in Bund yields to all-time lows. Then also on the peso, this morning we had since yesterday our bias chart resistance and we kept it here for today at 1915.3. The high was right there at 1915. Actually, we were coming into that area right then and said, hey, oh, right before it, said, hey, watch out. Don't forget the bias chart resistance at 1915. I didn't do anything with it. I mean, I was long last week and then ended up getting stopped out, but I was long at very, very cheap levels. But my forte is not to be holding, although I think Blake had been long looking for, this longer term trend line, which maybe was going to go and hold, and it has hold. And finally, we've been able to push beyond this area here in the peso, but I'm more of a scalper. So it's not my forte, like I said, to hang on to these levels and try and jump in and out of markets. And the dollar CAD has been kind of hanging around after it slid. I certainly didn't want to hang on any further, and I wasn't really interested in getting back in this market. We finally started to work ourselves higher here. In the dollar yen today, we did have our bias chart resistance. You can see here at 8:30. Like I said, once again, if you're a subscriber with ForexAnalytix, you get these levels at 4 a.m. in the morning. That's when we have our webinar. I post it immediately right after the chat. And then even if you're available for the webinar, Stelios posts that in the chat so you can watch it about an hour and a half before even the New York Open. So you can see here with the dollar yen, we had 833, and the high for the move, you can see right here, came in just shy of that. Really came in right there at 829. So up by 4 pips, but that's what we're looking at. You can see right here the touch is coming across right here at 833. That's what, and we saw a decent little pullback, not a whole lot, but what do you expect in this type of summer trading and ahead of ECB and FOMC? The market is trading in some ways relatively quiet. We did see the Kiwi going and pull back, and our bias chart support comes in a little bit lower here, down to 66.84. Bloomberg story suggesting that the RBNZ is going to be looking to go in and potentially cut, and that certainly weakened the Kiwi, but we've had quite the rise from the ashes, from like the phoenix, rise from the ashes in this Kiwi as it had come back and tested, if you look on the daily, a trend line with a very nice hammer bottom, and we were really just going up, up, up and away. So really not turn back that much if you think about that. It's had such a phenomenal run here. Overall, things are somewhat quiet. We are seeing the cable weaken in a bit here. We talked about that yesterday. People are really starting to get very, very bearish here on the cable. They think that we're going to have quite the hard Brexit with Boris Johnson. We've seen some post resignations with him coming in. So once again, like I said, market, it just continues to be incapable of holding a bid. You certainly see a little bit of pop back up here, and then we quickly go on and give that right back up. And you can see here with the cash dollar index, we actually today we pushed the bias chart resistance. I think we have it at 97.68. Take a look here. Oh, actually 97.64. So we've even pushed beyond the 64 here, right there. We even gave it a little bit of extra room to 64, and we're still pushing a little bit higher here. Once again, this weakness in the euro is really, just driven this dollar index. It has no choice because, as I mentioned, quite often you'll see the dollar index and the euro trade inverse to each other because the euro, once again, comprises 56.4% of the cash dollar index. We'll probably see more quiet activity. I wouldn't have thought that the euro would go much lower than 65. Not that it has gone that much. We're, about 13 pips lower. But, man, it cannot find a bid. And certainly the thought that we may see even some announcements about some TLTRO really opens the door, like I said, for them to even move lower. The thought being is that they may cut down to minus 0.50 from where we are at minus 0.40. So certainly the euro having a tough time. And, with the U.S.-China trade talks, that's Draghi's, if you want to call it, his cover for looking to continue to stimulate, saying we're not getting the inflation, and because of the U.S.-China trade conflict, it's putting on a damper on growth. Well, Eurozone's never been really noted for growth to start with. You usually see the hub of the Eurozone, Germany, but it's has its own troubles over the last 6 to 9 months. And although we're seeing, France and Italy kind of hold their own, surprisingly, Italy, the numbers have not been bad at all. Let's go on and move into the cross rates. Like I said, it's relatively quiet. You can see here, looking here with the gold, we are still pushing a little bit lower here. Once again, stronger dollars, aiding to that lower move. That being said, you have a bit of an undertone bid with, interest rates going lower. That move to the dollar also, they were referring, I saw a story in regards, referring to the interest rate differentials that in the, in the globe, for now, really the U.S. interest rates are still outperforming those in the developed world. So you still see that push into the dollar, but obviously a lot of it, once again, not only that, but obviously with the euro so weak and the expectation that there's going to be additional stimulus has pushed yields. So basically, like one begets the other. Did the egg come before the chicken, or the chicken before the egg? Because the euro pushes lower, but that's it because the interest rates on bond yields are going to record lows because they think they're going to be more stimulus, which pushes that to new lows, which pushes the euro, and around and around and around she goes. Other than that, not too much. I mean, the Aussie yen has just come into our bias chart support here, and you can see a little bit of a hammer bottom forming on the 2-hour chart. That will complete at the top of the hour, so we'll have a nice little bit of a hammer bottom after this quick dip in here. Other than that, relatively quiet other than here with the euro yen. Certainly taking another dip here. Like I said, the euro's had quite the fall. And once again, you can't find a bid on this thing to save its life here with this market. Although the only little bit of bid we saw here is with the Kiwi, and that's only because the Kiwi is selling off of its own volition, nothing to do with the euro per se. And then, of course, the guppy still, hanging around these lower lows. So I mentioned gold, still a potential for us to move a little bit lower. But once again, you get that stimulus. The main reason that gold had been moving so high, once again, has been the whole talk about, interest rates being cut. And that's what gold has really hung its hat on. You think, wow, how could gold be so high when equities still remain high? And equities still are holding up. Once again, expecting this, interest rate cuts, hanging its hat on that, not only for the Fed interest rate. And no one expects more than 25 basis point, but if the Fed were to do 50, no one expects that, you'd see the equities really take off. We'll go and return back into the main screen because, like I said, it's relatively quiet. And once again, back in here, dollar CAD just paired back. Once again, a little bit quiet. As I mentioned to the guys in the room as we paired back, I said, hey, look, watch your scalp support here at 31.42. We did dip just a little bit below that, but we're kind of hanging around that area here on the dollar CAD. Dollar yen did pair back a little bit. We'll see how things hold out. And peso still hanging around close to its bias chart resistance, which is 19.15. It's a quiet session. That's all that we have. And once again, you may want to consider a 10-day trial with ForexAnalytix for $1. You'll be able to go on and have not only access to the chat room, which is very supportive, but to all the different analysis, whether it be macro or basic technical or, Elliott wave or harmonics, as well as the, some of the other features that we do go on and have, which is when we have our economic news report, we have the data flash. Wow, almost as quick as Bloomberg. But once again, thanks for joining us here on ForexAnalytix, and have a great trading day.